Welcome to the Real Estate Syndication Show. Whether you are a seasoned investor or building a new real estate business, this is the show for you. Whitney Sewell talks to top experts in the business. Our goal is to help you master real estate syndication. And now your host, Whitney Sewell.
This is your daily real estate syndication show. I'm your host, Whitney Sewell. Today, our guest is Aaron Wolko. Thanks for being on the show, Aaron.
Thanks for having me, Whitney. It's a pleasure to be here and a pleasure to speak with you this morning.
Yeah, you as well. Aaron has over a decade of experience in the capital markets field. He started his career as a tech analyst in Australia. After advising Fortune 100 companies there, he went on to manage portfolios at hedge funds and venture capital firms on the East and West Coast in the United States. He now finds himself financing commercial real estate deals ranging from $1 to $100 million all over the U.S. for a company called Eastern Union. And I would imagine many of the listeners have heard of Eastern Union. And so we're grateful to have you on the show, Aaron, and maybe shed some light about financing. But then, we're also going to hear more about some of your just experience, before Eastern Union, before getting into financing and how that can help us as well, interested in that. But maybe you can fill in some of those gaps now and how you got into this business, and then let's dive in.
Sure, Whitney. So I started in finance when I was a teenager already. I was trading stocks. I used to use my mom's trading accounts. I had a little bit of money, birthday money I saved up, and I would leave school, ditch math class to go and trade what is essentially OTC stocks, penny stocks in Australia. I definitely had a good few days doing that. Till today, some of my fractions are a little off because I missed some important classes in like ninth grade math, but no regrets. And after I finished school, I got a internship at Credit Suisse, and I spent some time there as a tech analyst, and I would sit with boards of ASX companies, which is the S&P 500 of Australia, and those were multi-billion-dollar companies, and I would look at their earnings of the last quarter or year. And what I noticed was that their mobile application platforms were gaining steam, but they weren't allocating any resources to it. So I would sit there and drill the executive chairman of the company, running this I'm like a kid, who knows how to read a balance sheet. And I would drill him saying, listen, you have to invest more capital resources to your mobile app facing the client. And that way, when they come to use your service, whether it was a gambling service, hospitality, anything that we were doing that was tech facing, they would be able to do that seamlessly on the phone. And this is 2008 when the iPhone just came out. So they weren't even thinking about this, but they ended up allocating resources, and those companies ended up growing by billions in market caps over the next decade or so. So that sort of was what was my early exposure to the capital markets. And I moved over to the States and started working at hedge funds and venture capitalist firms. And now I'm with Eastern Union, financing real estate deals all over the country.
Nice. Well, let's talk about, financing real estate deals for a minute. And I want to hear more about your background and how, these things connect, and just thoughts that you have on that. But maybe we can talk about some current market stuff as far as financing. I know the listeners wondering, about that, what's happening, what's expected to happen, some of those things, just in the current environment that we're in, especially from, an expert from Eastern Union like yourself. So, why don't we just jump right into what do you see right now as far as financing, specifically multifamily? What are some things that the listener should be thinking about, or maybe even things that we should be doing differently now than, say, we did 6 or 8 months ago?
Right. So I would say the first thing is that hospitality is out the window for now. That's the word on the street, unfortunately. And this is a firm, Eastern, who's done very large hospitality deals in the past. We've, helped our clients buy hotels and casinos and stuff like that. So to have that revenue stream completely off the table is tough, but I'm personally optimistic. I just vacationed to Miami Beach last week for my anniversary, and we saw the hotels there over Labor Day weekend at relatively full capacity, relative to what the county allows. So I think hospitality is gaining steam, and I myself are working on a few hospitality deals, some in the 10 million range, some in the multi-$100 million range. And I think that by the time those deals close, we'll already see COVID have passed. So That's in hospitality. So on the multifamily side, the one thing that investors have to think about today, I think, is bringing more equity to the table. On an average multifamily deal, relatively stabilized at 90% occupancy, an investor could have bought 15 or 18% cash down, right? And we could have financed at an LTV of about 82.5 or even 85 on a really good day. But now banks aren't considering anything above 75%, and even that is you have to twist some arms to get today. So the first thing I tell my clients when they come with a deal they're in contract for, I say, do you have that first 25% lined up? Are your equity partners committed? Are your syndicators committed to put that money down before we even get the process started? Otherwise, I'm just not going to spin my wheels. On the rate side, on the other hand, we're seeing rates. We're seeing rates lower than ever, right? We did a refi recently in DC at 2.6%. We're seeing Fannie Green deals going at 2.9% on $25 million acquisitions. So we're seeing some of the cheapest money that I think any of us have seen in our lifetime. I know in the early 90s when I was born, my parents told me they were earning interest on their accounts at 17% in the early 90s. So I can't imagine what you were paying for money in that time, but it definitely wasn't a flexible market for the average real estate investor. You have to come with deep pockets behind you. Nowadays, just about anybody can take that cheap money. Your rent roll pays your interest and then some, and you can build up an empire if you get started today. So it's a real good time to be in the market, and things are only getting better, right? We work with a few hundred banks around the country. We have a few departments, meaning a few different offices who spend all day establishing relationships with banks. So every day we get emails and phone calls from banks saying, in this market, we've opened up for these kind of deals. Tell your clients to send in their deals. We've closed with over 150 banks so far this year. I believe that number's accurate, give or take 10 or 20. And, every day more and more lenders are coming and saying, we're looking to deploy funds. They've been sitting idle, gathering dust long enough. Let's get moving.
What's your expectation for rates over the next, 6 months to a year?
I reckon they're going to stay low. I could tell a client, hey, there's a risk it's going up, so get in now. But realistically, I think if Trump stays in office, and his relative control over Powell, who controls the rates, I think they're going to stay low. Could they go any lower? Possibly. I know definitely in economics classes, we heard about rates going lower than they are today in theory. In practice, I don't think we've seen it for a long time, but maybe they could. But I think for the next 6 to 12 months, you're pretty safe with getting low rates. There's no absolute urgency, but now's the right time to be, fielding offers, putting out bids, and getting your business moving so your position's right when they do go up again.
What's your? It's talking about getting your position right, or your business in the right position. Any thoughts on that as far as what an investor should be doing right now, and just compared to what you see happening or coming over the next 6 to 12 months outside of rates?
So my smart clients are aggressively buying at the moment, and my gutsy clients are building at the moment, and that's something interesting to think about. So I don't know how many of your listeners are out there actually developing property. That's a whole other ball game. But the clients I'm working with are in contract to 2, 3, 4 pieces of land, shovel ready. We're just getting the financing in place and the equity. Some of them we've got on the whole capital stack taken care of by hedge funds. Some of them are working with private equity guys. And then on the finance side, on the debt side. But the way they see it is that I put the shovel in the ground today. I build in 24 months, my 40, 50 units are ready. And by then, COVID is totally forgotten and everything's back to normal. So those people with those long-term visions are the ones that were successful in 2008 when the market came down. The people who said, instead of being fearful now, let's act now. So by the time that we're ready to dispose of these assets or start renting them out, the markets are back to normal. That's exactly what happened. It's very easy to get fearful and to pull back on your operations and sit at home twiddling your thumbs. But I think the real smart guys are being as active as possible right now, trying to grab good deals and positioning themselves for 2021, 2022, when everything's back to normal.
Long-term vision. It's interesting you mentioned that. You say, those guys are the ones that are going to be successful. We've seen it in the past, as well, instead of panicking and wondering, just sitting on the sidelines, right? I mean, they're very active in staying in the market right now. You've had so much experience, right? I mean, in venture capital, different things before, coming to Eastern and, and in finance specifically. Tell us a little more about, just how those things merge, what that looks like. And I'd love to learn more from just all your experience, even before Eastern.
Sure. So just to give some background, I started, already at the hedge fund I was working at in New York, which was called Darling Capital. We were doing PIPE. So we were investing in public companies in the OTC, and we would take a discount of the shares. We would take real companies who had real operations, and, we would expose our clients to huge upside. We hit 20x on some deals. So it was a hedge fund investing in public markets primarily, but we had venture capitalist returns. And then I went to work for an actual venture capitalist who was in the fintech space. And as a result, I established a repertoire of clients who had the risk appetite for venture capitalists. So a lot of them are actually real estate investors already. They own a building or two, or they're invested in portfolios. And then they had this disposable income that I say, here's 6 figures or even 7 figures that I really don't mind losing, but I would love to make 20, 30x on it, and really be able to retire on a yacht. So, do what you can with it. And now I'm sort of on the other side. I'm with real estate guys who they like those safe brick and mortar returns. And yet, a part of them also has this appetite for something more interesting. So from my venture capitalist days, I still consult for some of those firms. And most recently, I was fortunate to allocate funds of my own clients into SpaceX through a fund I consult for, and into Robinhood for a fund I consult for, who I believe are IPO next year. I think that's public information. So for your listeners, right, the real estate syndicators, you have investors, they're probably on your speed dial. I don't know if speed dial exists anymore, but they're definitely on your top 10 WhatsApp most reached out to. And those guys trust you, right? When you come to them with a deal, they trust that it's a good deal. They're going to get 18 or 20% cash on cash. And, they wire you money because they trust you and because they trust your judgment. I think if you open yourself up to a more extensive alternate deal flow, like private equity, reach out to some venture capital funds, see if they have anything interesting, or some secondary funds to have access to these really cool companies. I think that could be a really cool, second stream of revenue for you to sort of get access to those deals, reach out to your investors and say, hey, I know we did a real estate deal last month. Do you want to do, a Neuralink deal next month? And I think that'll really spike up their ears. I think you've already got them committed to you as a person, if you've already given them a couple good deals. And I think it can really help establish your reputation as someone who not only just does real estate, which is not cliche, but it's very standard, right? This is someone who actually, I can go to for all my investment needs and all my financial advisory needs.
You know that to make it in this business, you must attract passive investors. How do you do that? Learn the secrets at the Virtual Raising Money Summit. Text Whitney to 55444 to get a special pricing of only $97.
Yes, no, that's an interesting topic, because even within LifeBridge Capital, our team has discussed this exact thing and saying, okay, are we going to, thinking long term, are we going to, be the expert in multifamily and just focus on that, or are we really going to build a platform here where investors can, diversify into different asset classes and us have an expert in numerous different asset classes, and I think that's really where we want to be. We want to be kind of an all-in-one shop for an investor. And it's not that I'm going to be the expert in every asset class, but our team can be, as a whole, and provide other opportunities. Are there examples of ways that you've seen other groups do this well, that are just, standing out amongst everybody else, where they've really, position themselves to be experts in numerous asset classes or other even non-real estate stuff?
So Eastern Union is a great example of a company that does everything in real estate, because we have different departments. So if I bring in a deal that is not multifamily, we'll still get it done, right? It might be a healthcare deal, an assisted living facility. So it's sort of borderline multifamily and healthcare. we have an entire healthcare department. These guys have been in it like over a decade. They finance, north of $1 billion of healthcare deals, and they know the business back to front. So I'll say, let me get my healthcare specialist on the line. He'll get on. He understands it perfectly, and he'll go ahead and run the deal. And we do that with everything. We do it with small loans department. We do it with warehouse, industrial, SFR portfolios. And recently, we even opened up this has happened this week or yesterday, I think, a real estate brokerage firm. So often, because of our extensive contacts, we have guys saying, look, I'm looking to dispose of this property. I'm looking to buy a property here. Do you have anything? And the answer up until yesterday would have been, yeah, maybe I'll hear of something, but it's not my bread and butter. I have to focus on financing real estate deals, not finding new real estate deals. Plus, I'm not licensed to broker real estate. So, you'll have to go somewhere else. But now we can say, well, actually, there's a guy in the company or a team in the company that will actually do that. So let me pass you on to him, his information, give him a call, and he'll find you a buyer or seller. So Eastern Union is a great company in that sense, where everything's perfectly streamlined, really great management team, and really smooth back-end operations. That's something I've never seen before, and I've been doing this over a decade. And then you have venture capital funds who have similar things. They'll take a tech team, a biopharmaceutical team, and they're completely separate, but they'll sort of share deal flow, but they each one focuses on their own expertise. So I would say someone like LifeBridge, you say, hey, we're looking for these kind of deals. We want to get into the healthcare space. Let's hire a healthcare specialist, someone who's been doing it a few years, has a good reputation, who can sort of fill these kinds of offerings, and you'll elevate him to a key position in the company, and he'll focus on all the healthcare, for example. So I think it's very doable for anyone who's already a trusted financial advisor, who's already managing money. You just have to make sure you have the right people in place, because you don't want to shank that opportunity.
Love that. It is about building a team of experts, right? It sounds like that's what Eastern's done, and other groups as well, because we do want to be experts in numerous asset classes, different investment opportunities, but I can't always be the expert in all those, right? And don't expect to be. But we want to have those opportunities for our investors as they have them, and provide other opportunities. So no, that's interesting, and just really thinking of ourselves as that financial advisor, or just somebody that we have a lot of trust of the investors. Obviously, if somebody's handing you $50,000 to $1 million or whatever their investment may be, even if they're a multimillionaire and they're handing you $50,000, that's still a lot of trust, right? It's a lot of trust. And so presenting them with other types of opportunities may be a good option, and just thinking outside the box. So Aaron, what's been the hardest part though of this real estate journey specifically, or into commercial real estate now for you?
Oof. At the risk of sounding facetious, I'd say it hasn't been too hard. I guess the toughest part on my end is flimsy clients, I would say, which maybe is not politically correct. But when someone brings me a deal and they say, hey, I need to finance this, please get me a good offer, I'm spinning my wheels. There's a lot of effort that goes in, underwriting the deal, finding the right banks or lenders for it, getting on the phone with those banks and selling that deal. And I come back with a good offer. Unless there's a very good excuse, I think the client should be, and everything's going smoothly, the client should be taking that deal, because I know there's nothing better on the market. And never have I seen a client come back to me and say, oh, you bought me this, I've got something better, and then that deal actually closes. What usually happens is, oh, that's a nice term sheet. Someone offered me a better term sheet, and then I say, okay, that's cool. Catch you on the next one. I want you to take the best offer that you have. And then they'll call me a month or two later and say, oh, that deal actually never went through. Can I get that term sheet back? And, at this point, it's a renegotiation. The bank's already forgotten about that deal. The rates and terms may have changed. Now they know that the borrower is a little more desperate. So I think when you have a solid offer on the table from a firm like Eastern Union, which has the reputation we have, 20 years in the business, we've closed over $30 billion of dollars in financing. We've closed $5.5 billion last year. We offer equity and debt. I think when a company like Eastern Union offers you a term sheet and it's good, you take that, because Eastern Union will take you to the finish line. I think if a different kind of broker who maybe is running a small shop and is confident they can get it done, but the finish line is going to fail you. But the rate seemed a little better. I think there's a reason that that you got that better offer. It's actually not going to get to the end. So I think stick to the reputable firm. Doesn't have to be Easton, but obviously I would recommend coming to me. You can find me on my LinkedIn page under my name. But, Easton, if we give you a term sheet, it's going to the finish line. So bear that in mind when you're working with reputable firms on reasonably sized deals.
How do you like to see investors prepare for a downturn?
Prepare for a downturn. Well, who prepares for downturns? I used to
Hopefully
say, well, we everyone's so optimistic, which is a good way to be. And something like the downturn we've seen now is a black swan event if I've ever seen one. How often does a global pandemic come around? Once a century or something. So it's something our parents haven't even seen. Some of our grandparents haven't even seen, on this level. So it's very hard to prepare for this unless you're deep in the history books and have some kind of crystal ball. But at my hedge fund, I used to say, Joe, who was the boss, I used to say, we need, we're doing all this trading, we're investing, we need a short button. I want a red button which is ready to short the market as soon as we see things going sour. So I would maybe suggest, this is pretty wild advice, but I would suggest to your average real estate investor to take perhaps 5% of their income or something and put it on shorts on the market in case everything comes down, in case the Dow goes from 30,000 to pre-Trump numbers to like 18,000, which we saw it happening just about, in March of this year. You could have made a killing on that short. And, if you didn't collect rent for a few months, which I know a lot of people are struggling with collecting their rent, that kind of supplemental income could outweigh that loss. So I think always being ready for a downturn. If you don't know how to short a stock, go on Robinhood or Google it. Pretty straightforward. Short the market. I'm not saying to short the market, by the way. I'm saying be prepared to put some of your income to short in the market so that if there is a downturn, you can supplement your income.
What's a way you've recently improved your business that we can apply to our business as well?
Outreach, I think. I've recently got very active on LinkedIn, which you may have noticed. I have been on LinkedIn for years. I never really used it. There were months I wouldn't go on it. And that's because there wasn't much for me to do there. But now, when I know a lot of my potential clients are on LinkedIn, what I'll do is I will post things that aren't necessarily business related and not necessarily multifamily or real estate related, but I know that my name and my tagline, what I do, which is financing real estate deals, will pop up in their feed. And thousands of people, sometimes 10, 20,000 people see those posts. So I don't have to reach out actively to every person on LinkedIn and say, hey, can I finance your real estate deals? Because no one likes to be pitched on LinkedIn or in general in life, right? You want to establish relationships. But I want your eyeballs. I want to get in front of you, spread the net as wide as possible. And I want you to know that I'm here, I exist, and I can finance your real estate deals, whether it's $1 million deal or a $500 million deal. I'm willing to take a look at it, underwrite it, and see if we can't find the right lender for you. So I think for those who are looking for investors, syndicators, who want people, I think you should get on LinkedIn, get in front of high net worth people, put in your tagline that you take $50,000 for a real estate deal, something as simple as that. I take your $50,000 and invest it in real estate at high returns. Make that your tagline instead of some fancy CFO, chief, or executive chairman at, whatever your company is called. Tell people what you do and then get in front of them and post personal stories, jokes, funny pictures, meaningful things. You can go and see my LinkedIn and see what I write about. There's a good mix of everything. And, I'll wake up on a Tuesday morning and there are 2-3 deals waiting in my inbox. And, one of them is a very real deal. So I think that's a really great method to get out in front of people. And that's something that's made my life a lot easier. Instead of the regular cold reach out, which a lot of people in this business do, I put myself in front of a lot of people and let them come to me.
What's the number one thing that's contributed to your success?
I would say all my success is because of God, the one above. I know it's a bit of a cliche answer, but I think with any success story comes a fair amount of luck. or as we call it, mazal, a flow of goodness. And I'm very optimistic about everything. So I wake up in the morning, even if I'm not feeling great, I'll affirm to myself, it's going to be a great day. There's good stuff coming. And going into life with that positive mindset, and studies have shown this, a positive mindset with real positive feelings literally creates a positive reality around you. So, it's definitely the positive mindset, going into everything without doubt or fear. I have no fear I'm going to lose a deal. I have 100% certainty and confidence that when I take a deal to a bank, they're going to come back with a term sheet. The client's going to sign it. We're going to get it funded in 60 days. And there's never even a shadow of doubt to poison that deal. And that's the way it usually goes. And if it doesn't go that way, so be it. We move on to the next one. But along that process is always confidence, assurity, and faith that everything's going to be fine. So I think a positive mindset in everything we do, and just having no fear. Reach out to anybody. Reach out to Bill Gates if you want. I don't care. Reach out to Warren Buffett, Elon Musk. The worst thing that happens is that they don't respond to your email. Best case scenario, you're a executive vice president of their company within a couple of years. So, you have one life, live it, don't be fearful, and, go into everything with faith and positivity.
Great answer. And how do you like to give back?
So, I definitely don't like to publicize it, but, I'm Jewish, and in Judaism, as well as many religions, we're actually obligated to give charity. So I give 10% off all my earnings off the bat to nonprofits. Sometimes more. Sometimes I'll make a deal where it's like, if this deal goes through and closes, this huge deal I'm working on, it's going to be 20% to charity, right? And those are pretty big numbers, at the end of the day. So, or just about any friend that reaches out to me with a charitable cause, and I have a lot, and I even work for some nonprofits, pro bono. If they call me for a donation, no one gets to know. The size may vary, but just about any nonprofit that reaches out that's doing something, that I believe in is going to get a handout. I might even get monthly commitments from me. So I believe that not giving is like a cow that doesn't give milk one morning. That's the natural cycle of the universe. A cow is fed, and then it gives milk, and then it gets fed again, and then it gives milk, right? And that's, this is the old days when you used to have a cow in your backyard, and that's where your fresh milk came from. So I believe we're not very different. We earn money, the coin comes into us, and then some of the coin has to go out, and that's sort of that cycle and revolution. So be charitable, be giving, and you'll see the universe gives you a hell of a lot back when you're generous.
Aaron, I'm grateful for how you give back and just your positive mindset every morning. I think that's a great reminder for each of us. But just grateful for your time today and going through financing, what it was and what it's changed into now, and things we need to be thinking about there for rates and just, what some of your clients are doing, whether, you call them smart and gutsy, different types of clients and that are in the market right now and still making things happen and having that long-term vision. I think it's so important, but also helping us think outside of real estate potentially as well, and not having other things to offer our investors, and just really seeing ourselves as more of a financial advisor because we have so much trust of our investors as well. So grateful for your time. Tell the listeners how they can get in touch with you and learn more about you.
Yeah, so best way to get in touch is go on LinkedIn, Aaron Wolko. You can see how my name is spelled. And, PM me, add me, PM me. I'll usually respond within a day. If I'm on vacation, one of my team members has access to my account. So, something will be set up. And for syndicators, most importantly, I know you had Cam on recently, and I'd just like to talk about Park Place Investment for a minute. We've got an online platform now. It's essentially an information bulletin board, but that will evolve into other things eventually, where anyone looking to syndicate a deal, if you have a real qualified deal on your hands, send it to me. I'll underwrite it. We'll get it up on the platform. We have access between Cam and his partners and myself and my team. We have access to hundreds, if not thousands, of high net worth real estate investors who can't run deals themselves because they're busy, successful guys. So Cam, for example, is a physician. One of my investors is a brain surgeon. He earns something like $2 million a year. Obviously, there's a lot of disposable income, and he wants to put that in safe, high return investments. So they'll have a look at this platform. They'll sort of filter it out to the deals they like the most. they'll reach out to you and could invest, 5, 6, maybe even 7 figures in a deal that you're looking to raise money for. So feel free to check out Park Place Investment, and good luck there. I think we're adding a lot of value to the market, and especially the syndicators.
Thank you for listening to the Real Estate Syndication Show, brought to you by LifeBridge Capital. LifeBridge Capital works with investors nationwide to invest in real estate, while also donating 50% of its profits to assist parents who are committing to adoption. LifeBridge Capital, making a difference, one investor and one child at a time. Connect online at www.lifebridgecapital.com for free material and videos to further your success.